Hello, everybody, and welcome to the 34th edition of LM's Weekly Wrap, our weekly program to cover all the developments taking place in the international markets as well as the domestic markets and their implications on the stock markets, the various sectors of the economy, and individual stock performances. This week has been a kind of a truncated week because we had a holiday in between, and there was less action in the markets, totally influenced by the global factors. And At the beginning of the week, while the sentiment was seemed to be quite strong, towards the end of the week, I think the weak global cues have impacted the markets. And today we've seen some turmoil in the markets. There's extreme pressure in the markets at the moment. To explain more about the international developments and the domestic markets, I have with me Jash. He'll be briefing us on these aspects, which will be followed by the sectoral outlook from my side. Welcome, Jash.
Thank you, sir.
Take us ahead. Yeah.
Thank you, sir. It's great to be back. I'll be starting with Nifty. We've seen Nifty opening at 17,350, 17,400. Basically, we saw a very great turmoil because of the US markets yesterday. Dow was about 2% down, and the sub index of S&P 500 was about 4% down. This is after the remarks of the US jobless data, which was more than anticipated. Also, we have the payroll data due today, so let's see how that shows up. That's going to shape the next week for US markets as well as us. Despite that, after that, President Joe Biden's speech about the corporate tax, increasing the corporate tax, has sent down jitters. This comes after a 21 month 5% plus inflation in US. That it comes to control that. Also, now we anticipate a 50 basis points rate hike in March. There's a 80% probability that the financial services industry is counting in, and because of that has spilled over to India, and the bankings were muted today and also yesterday. So because of that, even RBI may hike rates faster than anticipated, and I think we should be cautious about that. Every week we have been saying be cautious. I think the investors are definitely losing confidence. It's their patience is being tested. But if you follow us, we select the industries and the sectors that perform best. So be very vigilant on what sector you're choosing, and not the bandwagon where all the sectors are being invested in. So for the more sectoral knowledge, I'm going to hand over to Nirav, sir. Thank you.
Yeah, thank you, Jash. As rightly pointed out, global cues continue to be weak, and that is impacting the domestic markets. Now, from an Indian perspective, one important thing is that with the interest rates rising, naturally there's going to be an exodus of capital. Plus, the smart money always looks for better opportunities. So, at the moment, in terms of valuation, in terms of opportunities which are available, I think the global investors are more keen on investing in China, Taiwan, Korea, etc. So, I think Vietnam, etc. So, these countries have better opportunities in terms of valuations. The valuations are more compelling. So, I think that could also be one of the reasons why the domestic markets have been impacted. Plus, we are in a kind of a wait and watch situation. So, starting off with the different sectors, first of all, we start off with auto. We have the FADA data, Federation of Automobile Dealers Association data, and they have said that while the outlook for the month of March looks quite strong, the demand is going to be very strong as far as the month of March is concerned, because we have a lot of festivals also in this month, Navratri and Ugadi, etc. So as a result of this, the festival demand is going to be strong. That is going to play out well, and after that there is a cautious outlook in the medium term. This is because the auto industry is anticipating that the El Nino factor could play out in June, and that could impact the rural demand. Now, we've seen companies like Maruti, Mahindra and Mahindra, of late even Escorts, their stocks have come under pressure because their commentary, which is coming from these companies, is that they're very cautious about the rural demand going forward. So I think auto stocks were under pressure on account of this development, but the saving grace has come in from Tata Motors, where we've seen that GLR performance has been very good, and they have given a very strong guidance for Q4 that is already there, announced when the Q3 results were declared. At the same time, now the company has filed for the IPO of Tata Technologies Limited, which is a subsidiary of Tata Motors. So that also could play out on the sentiment. So I think we did see some positive sentiment at last from the auto sector, some positive news coming in as far as Tata Motors is concerned. Next sector is banking. I think banking has been a sector which was beaten very badly in this week, and rightly so, because the global markets, yesterday we saw the global banking stocks, they were under a lot of pressure. So we've seen that impact on the domestic markets as well. But despite all this, we had IndusInd Bank, which was a strong performer in this week. In terms of the capital goods space, I think the capital goods sector continues to do very well. We have Siemens, ABB, Cummins, Thermax, all these companies which have got very strong prospects, and even the mid-cap capital goods companies, they continue to do very well on account of the strong opportunities which are going to present themselves in the renewable space, or whether it is the e-mobility space, or whether it is railways or defense, etc. Capital goods makers continue to do very well, and we feel that the prospects for these companies are going to be very, very strong in at least the next 2 to 3 years at least. Then we have cement sector. There is talk of further hike in the cement prices. The cement sector is making an attempt to increase the prices. At an all India level basis, prices have been increased in the range of 1 to 4%. So the price all India average is close to around 380 rupees per bag, and there is going to be an attempt to push prices further up if the market has the capacity to absorb these prices. Same is the case with steel. We have seen steel prices which have increased by 1400 rupees per ton. So we have the steel companies which are trying to push for further price hikes. But the total factors to be monitored will be the China demand. And while the China PMI data continues to be strong, the metal companies are trying to push for price hikes. And nonetheless, I think metal stocks this week were positive on account of the China related developments, while the IT sector stocks, pharma stocks continue to still reel under a lot of pressure. We have FMCG sector stocks which are also reeling under a lot of pressure. Overall, we've been seeing in the markets that there is no sector leadership in the markets. Most of the sectors which we just covered, which we just mentioned, are all showing signs of weakness. In fact, if we just take the top 5 performers of this week on the Nifty level, then just Adani Ports and SEZ and IndusInd Bank are the top amongst the top 5 performers. Rest are all PSUs, whether it is Power Grid Corporation or whether it is NTPC or whether it is GAIL India Limited. So now the focus is clearly shifting towards defensives, ultra defensives. As we come into March, the market is looking for dividend yield stocks, good dividend yield stocks, and I think that is where quality PSUs come into the picture. So I think we are seeing a lot of action in GAIL, NTPC, Power Grid Corporation, REC, Power Finance Corporation. All these are stocks where investors look for good dividend yields at the end of the financial year. So I think market is looking for that. And we also have defense themes which are doing well. We have railways which is doing well. And incidentally, one area which investors have started looking at is MNC funds. Whether they are MNC stocks or whether they are MNC funds, they are being used as an opportunity for steady compounding returns. So I think one can also have a look at, individually one can have a look at MNC stocks. Some wonderful performances by MNC companies, and most of these MNC companies have now started taking steps towards increasing their capex also. So a lot of queues coming in over there, whether they are capital goods, MNCs, etc. So we can definitely discuss them in detail some other time. Today, for the time being, I think we have timing constraints also. So I think with that we come towards the end of our session, and fine to concluding remarks. I think caution is going to be the buzzword in the market, because till we don't get positive cues from the global markets, I think it's going to be a largely wait and watch game. As we come towards mid March, I think the focus will again shift towards the Q4 results, Q4 earnings season.
I think that's going to drive it.
That's going to be the driver going ahead. So I think can expect the next fortnight to be quite lackluster, because we have the financial year end too. So a lot of taxation related adjustments and a lot of financial tax planning which goes into the last fortnight of the financial year. So with that we come to the end of this session. I think concluding remarks from Jash.
Thank you, sir. As sir very rightly pointed out about the dividend yield stocks, if we see all the major mutual fund AMCs, they've also got out new NFOs for dividend yield funds, and as well as the old ones that they are promoting very heavily. So very clearly, the investors want stability. That's where I think that's their safe space for the time being, and we would like to end here. Please like, share, subscribe, hit the bell icon, and for our research calls, log into our app. You'll get all our research calls over there. That's LM InvestMart. Thank you.
Thank you.